My name is Mohit Kansal. I'm a partner at the Clairvest Group. Clairvest is a private equity firm with a 30-year history. We invest in certain sectors, and gaming is our biggest and most successful. I spend a good chunk of my time in the gaming sector, focused on the supply and technology side of the industry. The short answer is yes, 100%. You're seeing ESG coming in from multiple angles. Here at Clairvest, or at least personally, we've always been focused on ESG. We just called it something else. But maybe to step it back a bit, there's many different forces or people or groups that are talking more and more about ESG these days, which are in turn making it more important in every decision we make. The first group, I would say, are investors. So we are investors ourselves. But as you see boards and in the media, in investment products that are being made, perhaps even in your personal portfolio, ESG is being more and more a topic of conversation. And it's moving funds or flows of funds are moving in certain directions, meaning companies that have more attention to ESG or are more ESG positive are getting higher valuations. And that, of course, is something we're paying attention to from a very profit and loss perspective. Regulators are another group that are, of course, talking more and more about ESG, but stuff around responsible gaming or ensuring aware and taking the right risks is important. And you're seeing that across Europe, the UK being one geography in particular. And then a third group I'll mention is employees. So anyone who knows and is interviewing folks in the gaming sector will probably heard more and more questions coming from candidates on, okay, what are you doing with respect to ESG? How are you thinking about these topics in your company? And to attract and really retain good talent about ESG. So overall, you know, if the funds are flowing in a certain direction, regulators are caring, employees are creating, you kind of have to think about ESG. But in the day, also, as I mentioned, we think it's an important consideration and key to creating long-term value in companies. So for us, so we are a private equity firm. Our biggest decision is typically around whether to make an investment or not and on what terms. So for us, we are actively thinking about ESG really at the crucial points of when we're making that decision, the two being one around a letter of intent when we are finalizing the commercial terms or the deal parameters really, and then at the actual investment, weeks before the money is actually moving and we're making the final call at the board of directors around a memorandum or presentation. So to make it a little more real, I thought I would talk through two example type factors that we're thinking about. And maybe just to highlight, and I think we'll talk about this, but there's all sorts of checklists and questionnaires that run around. But for us at Clairvest, we think about kind of customized factors that make sense for a particular investment. But two that are an example is governance. Governance is really, really big to us. So we are a partner-oriented firm. So we have to make sure our partners are thinking ethically and thinking appropriately and have the right checks and balances around them. So we are quite big on extensive background checks around our entrepreneurial partners and senior management team as well. Typically post-close, we're putting in a strong board of directors function as well as proper reporting that comes up the chain. So we're looking at risk management in a proper way, and any key or critical decisions are being floated that there are checks and balances around that. A second one is really typically more around our physical footprints. So if we're investing into an actual physical casino, when we are in due diligence, we will almost have an environmental assessment where we're thinking through, okay, if it's a new build, what is the impact of that new build? How are we thinking about the impact, whether it be waste or whatever else? Maybe there's some environmental consideration with respect to the land. And so, those are two such examples, but I can, depending on the transaction, there could be many more, whether it be data security, whether it think about customer satisfaction, whether it be about how things are going with the regulator, et cetera. But I thought those were kind of two to talk about. So, so those are how we think about an investment decision. But another factor which I thought I wanted to highlight was I think any good organization has to be values-based. And here at Clairvest we are, and we have 5 such values we're thinking about. And 2 in particular, integrity and long-term orientation, I think are right directly on ESG. So in your day-to-day, if you're not thinking about, okay, I need to be an integral person, I need to think beyond, the immediate dollar and cent, and I need to think beyond the next quarter's earnings, you have to be thinking about ESG. And so even though I talked about kind of 2 steps in our investment life cycle, I like to think we think about it every day because it's core to our values and it's what we do. So I think it boosts profits in the long run. Obviously, these days it's more in the media, it's being discussed more often, and obviously I'm doing this interview, so it is a topic of conversation. But if you do not think about some of these factors, you're really shooting yourself in the foot long term. I mean, I highlighted a few in the previous consideration, but maybe to take a few others. So if you were to invest in a gaming company and they were just very poor on responsible gaming or social considerations, if they didn't have proper checks and balances, you are being, frankly, quite dumb in the long term, right? You might have a few good months or a few quarters of profitability, but in the long term, are you actually, you're probably going to get some big fines from the regulator. You're going to get kind of known in the industry for that. You're going to have kind of upset customers. Like, nobody wins in the long term if you don't think about the social considerations or perhaps responsible gaming. Another such factor, if you don't have a good reporting mechanism or board of director function that you're thinking about, okay, issues are being raised to the top and we're thinking about things, it's inevitable that you're going to have an issue. Someone's going to make a bad call somewhere. Someone's going to make a risky decision that doesn't make any sense. Again, it's inevitable over the long term. And again, you might save money in the immediate term and you might do things by not having those checks and balances. And the last one I will say is, and we take very seriously, is of course data security, infrastructure security. And again, you could save money while not spending the money on the proper cybersecurity policies and checks and balances and software. But if your IT infrastructure is full of Swiss cheese and you're going to get hacked, again, it's inevitable long term. You're going to be in trouble and you're going to have fines. You're going to have upset customers. So I guess net, I know it's a popular topic these days, but if you're not considering it, again, you're shooting yourself in the foot, and long term, you're going to have issues. So if you're thinking for the next quarter on profit, sure, it might hurt, but you're thinking 3, 5, 10 years down the line, it's going to hurt you, and you kind of have to consider it to be a successful investor. So for us, we don't model ourselves off any particular firm, but we take several inputs to define our own journey. And to be frank, since it's a bit of a nascent sector, we like to take our own spin on things and say, okay, let's pull for some best practices we've seen elsewhere. So kind of two areas that we look to for kind of insight, and then kind of how we approach it I thought would be helpful. So the first being, we don't do everything ourselves. We rely heavily on outside service providers from time to time, and in particular, we have several law firms with established ESG practices who we are working with regularly on specific investments and just generally. So often we are getting white papers or webinars or having conversations with them on the topic, and that's done a lot for us in how we've kind of defined our ESG approach, code of conduct, and everything we do in the day-to-day. A second place we look is from the PRI. It's a UN organization that has, frankly, a lot of good material on, okay, investors of all types, how should you think about ESG? How should you incorporate in what you do? And they have a lot of good information for private equity, things like due diligence questionnaires, factors to think about in private equity, and they host really good webinars as well. So we frankly take the different inputs, and those are 2 areas in particular, and then we bring that into our own customized journey. And the one thing we like to do is, again, I've mentioned this before, but there are these checklists, they could be very, very long, maybe 30 plus pages of every little piece. And I think they are important, and it's important to make sure you capture everything. But for us, we're very big on customizing those checklists, really think about what they mean. Because it's very easy to get lost and say, okay, we scored 9.4 out of 10 on ESG, therefore we're good. Like I know there's temptation to do that, and we think that's important to a degree, but we're very big on, okay, what does that mean behind it? And should we make the investment decision or not? Or more importantly, how should we adjust things going forward? Should we bring in a new process? Should we make a new hire? Should we shift strategy, etc.? So again, we don't model ourselves after any particular company, but we'd like to take inputs, and I mentioned too there, and kind of customize our own journey on what we do.